What's up? Good morning, guys. It is about 7 a.m. Tuesday morning. Just going for a little walk. But I wanted to talk to you guys about what I learned yesterday. Alright, so yesterday I uploaded the videos day 50. Well, the last 2 days I uploaded days 51, 52. In those videos, we saw our Tesla stock go up, but our options stay flat on that one day. Then the next day, Tesla stock went down, and then the option went up. And at the time, I didn't understand why that was the case or why that was happening. I asked you guys, the viewers, if you could comment in the comment section if you knew any reason, and I had a feeling it was because of implied volatility, but I didn't exactly know how that worked. I just had a feeling that that's the reason why that was happening. And someone did comment on the second video and said it was most likely implied volatility, and he sent a link to a video. So I watched the video, and I did learn a little bit more about how implied volatility affects the options price. Then I watched a couple other videos, and then I went back to the video that I first watched when I first started learning about options. It was called, it was like Trading Options, Understanding Option Prices. I believe that was the title. It was by Skyview Trading. I'll put a link in the description below about that video. Really good video. But when I watched that video a second time, the first time I'd watched that video was like in January. So when I watched it again, it just made so much more sense to me. The best way to think about options is kind of like insurance in terms of pricing. The more risky you are as a person, the more you're going to pay for insurance, the higher your premium will be. And so that's basically how like the options pricing works. And there's other things that go into it, of course, but the way implied volatility works is if a stock is more volatile, meaning its jumps are higher, its options, the price of it will be more expensive. And here's a good example. Let's say you have a stock that goes, usually it goes up like $10 a share each direction on any given day. And then you choose, so you're buying an option for that stock, and then you pick a strike price that's only $5 above the current price. Well, because of its volatility, if it goes up the next day, and since its average move is $10, if it goes up the next day, you're going to be in the money. So because you have a really good chance of being in the money because of its volatility, you're going to be paying more money for that option. Now, if you have a stock that goes up maybe like 10-15 cents a share on any given day, and you pick a strike that's $5 above, well, it's going to take a while to get that based on its volatility. So you're not going to pay as much money for that because you might not even hit that price based on its moves that it does. So when we had Tesla that one day back in day 51, Tesla went up a decent amount. I expected the options price to go up, but apparently its volatility rating or whatever had gone down or stayed flat or something, which caused the options price to just kind of stay flat that day. And then the next day when the price went down, apparently that raised its volatility, which made our options price go up. So we actually made money that day despite Tesla going down. And I was talking to my good friend Joe, who was explaining to me way back in the beginning when I started trading options. He was helping me a little bit understand him. He was the one that talked about the iron condor. He also mentioned that usually when stock prices go down is when volatility will tend to go up. So that also makes sense why we made money that day on day 52 when the Tesla stock went down. He also mentioned that another possibility could have been like someone was just heavy volume, like if there was heavy volume trading that day on that one option, like someone could have just been buying a ton of those options, which could have, decreased the supply since he or she was buying them all, and then it raises the demand, which raises the price. So that's another thing that could have happened, which was a good point. I never thought about that, but I believe the main reason though was implied volatility. And now that I have a more understanding of implied volatility, I think it's going to help me determine when I should start looking to get out of options more often, I think. But it's nice to understand that finally, because I didn't really understand how that worked before. So hopefully that explanation worked. If not, just keep watching some videos on it, and eventually it'll click for you and it'll start to make sense. All right, so one thing I did forget to mention earlier was that when I was watching those videos, they were talking about being on the right side of volatility. So basically they're saying because most options expire worthless is like the general consensus, I guess. When the volatility is low, you want to be buying call options. When the volatility is high, you want to be selling call options. So the premise is because higher volatility options are more expensive, I guess. That's when you want to sell them. And if they expire worthless, you make more money that way. But on the other hand, as if you've been watching the vlog, I've been specifically buying call options. And so I don't know if I'm incorrect at doing that. I don't know if I've accidentally have been on the right side of volatility the whole time and just been getting lucky, or if I have actually just been picking good companies based on my research, and maybe that's why I'm still able to make money with buying call options, like predominantly buying them instead of selling them. So I'm not 100% sure like exactly why I've been seeing the gains I've been seeing. Because from when I tell people I'm up like 123%, they're like, wow, you must be getting really lucky, or that's really good. And I've been getting some comments saying that like I shouldn't be buying so many out of the money options. It's too risky. But I'm not sure if it is, or if I'm not sure if because I'm picking good companies that its volatility has been going up, but in my favor, which when the volatility increases, the premiums increase. And so I'm not 100% sure. However, if it's been working for me so far, I kind of want to stay on that path, because I don't want to get into the point where I'm starting to overanalyze everything with all this new information that I'm learning, and then I'm missing out on good opportunities because I'm not going with my gut instinct on picking companies like I've been doing this year. I don't want to just be like overanalyzing and then passing on opportunities because of the numbers, when I could have made a lot of profit by sticking to my original strategy. So with this whole thing that I've been learning about implied volatility, I'm going to try to use it to my advantage, but not to my disadvantage. So I'm going to try to use it to see if it helps me either get out of options at better times so I can lock in more profit, but I don't want it to cloud my judgment. So I'm still going to try my best to go with my gut instinct. I'm going to stick with the companies that I'm bullish on, like Universal Display, Apple, Tesla, Amazon, Google, Netflix. I'm going to stick with those, like the all-stars is what I call them, because like they've been doing so well for us this year. I'm going to stick with them. I'm not going to really worry about whether I'm overpaying for an option because volatility is high or something, because at the end of the day, if I buy an option, even if I overpay for it, and its stock jumps like I've been predicting it would with these companies, the option will still go up in value. So we'll still make money regardless, whether or not we're overpaying for the option at that point in time or not. It really hasn't mattered so far for us. And so I'm hoping that, I'm getting a little nervous though, but I'm hoping that, because I really don't want like a bad day where we lose like 20 grand and just erase so much profits. I really don't want that to happen. So I'm hoping that this information will help me kind of safeguard a little bit against that. But yeah, so I guess that's all I'll talk about with that, because I think I've kind of exhausted that point so far. So the market actually opens in 10 minutes. So I'm going to finish eating, turn on some CNBC, and then we'll see what's going on with the news.
Number from industrial production that's offsetting a miss on housing starts.
He just mentioned a pretty good number by Home Depot, and we owned their stock for a little while too, but we sold it. But yeah, Home Depot is a solid company to invest in. They've just been climbing.
Salesforce is about to report this week.
I've never invested in Salesforce. I'm not really 100% sure what they do. Check out AMD though. AMD's making a comeback. Look at that. Nvidia's up. Could be a good day, hopefully, if this remains. We should have a nice day today.
It's artificial intelligence. Now I know Nvidia seems that
yeah, they were saying the Dow hasn't put together 3 days in a row of gains since February. But he was like, the other guy was saying, but if you're in the cloud,
the rest
Does it
of
really
our
matter?
country. They're just so far ahead. And now my problem with that is how much of that is because we're not getting what we thought.
Hold on one second. I'm gonna rewind it for a second.
There is just Workday yesterday hit a 2-year high. If it's in the cloud or related to the cloud, it's artificial intelligence. Now I know Nvidia seems that bad. I don't like Nvidia being up 2 points before the day starts, but
see, I don't know why he said that. Why is it bad that Nvidia is up $2 right now? Is that I don't know what his reasoning for that is.
And now my problem with that is
I see that as a good thing, but maybe he knows something that I don't. That was interesting though. Look at that though. Dang. That's crazy. If you've been buying options with Nvidia for the last year, you've been making buku dollars right now. Applied Materials is up. They make some materials for the iPhone. I'm not huge into oil, to be honest, because I don't see it as being the future. So I don't bet on the stuff that's not in the future. I bet on the future. So I just don't see oil being something that we're going to be relying on a whole lot more in the future. I'm betting on solar and wind and all that. That's what I'm betting on. Alright, market looks pretty good. So
it's funny. I was looking at
let's see.
Bristol Myers. When Jana was in Bristol Myers, we thought that was going to get excitement. I know beyond me anyway. Well, because
there's Nvidia, they're up even more. So let's go check out how we're doing. Let's go into the kitchen. I opened up the Scottrade already. To refresh here. Holy shnikes. Oh my gosh. So I went back and rewound. That's why I was already logged in. I went back and rewound the DVR. So it's already actually 8:38 right now. But I wanted to show you guys what they were talking about. I want to show you this thing too, because we were just talking about implied volatility, right? And EA is up 14% on the option. But when I looked for it on the stock list, it's all the way on the third page. And it actually, at the time that I saw that it was up on my list, it was down here in this watch list. So again, it could just be a volatility thing, or maybe there's heavy volume trading on that specific price, on that specific option, I'm not sure. But as you just saw, the stock wasn't doing like crazy well, yet the option is doing pretty well. Oh, and then Amazon just refreshed. The first time I opened the account, it was still at 0. I think Tesla was still at 0 too, so was Apple. So that's why we just jumped up quite a bit there. Oh, I thought, okay, wait, where's the Apple call that we sold? Where is it? Why can't I find, oh, there it is. Okay, so even though Apple is doing well today, so let's look at Apple, and let me show you another thing. Let's talk about time decay a little bit. Apple is on the second page. Where is it? There it is. So yeah, Apple's down a little bit right now, which could be affecting volatility. It can also be affecting its value, just its general value. So you can see the covered call that we sold here, down 1.74%. And that's good for us since we sold that option, but it's still really expensive. But another reason it's dropping, of course, is time decay. Today's date is May 16th, and this thing expires May 19th. So it's going to lose a lot of value in the last week. However, it's in the money right now, so it's not going to lose a whole lot of value because Apple's stock price is, where is it? $155.45. So they're plenty in the money right now. Had they been out of the money right now, this would be worth way less. This would probably been worth like 20 bucks right now, maybe, if that. If it was out of the money and it was looking like it was going to expire worthless, this option would be worth way, way, way less money. So I need to come up with some money to buy this back, because otherwise I'm going to have to sell my Apple shares. And I'm not going to be able to sell it at 155. I'm going to have to sell it at 150. However, if I were to sell this stock right now at this price, at the 155 price, the extra profit I make by selling it here instead of at 150 would pretty much amount to this much, $565 anyway. So that's kind of how that works. Like, if I were to buy this back to keep my shares, I'd be spending this much money, which is pretty much the profit that I'd be getting by holding on to my shares at 155 instead of selling it at 150. So you'll see these numbers pretty much converge to that amount. So yeah, it's really, I don't think it's really likely that this thing will drop much more in value, because it looks like Apple's gonna, this option that I sold, it's looking like it's gonna expire in the money. So I need to, if I want to keep my Apple shares, I'm gonna have to come up with some money to buy this back. Now, so here's my dilemma. I learned some more about implied volatility, and I'm already starting to think that I should keep my Apple shares so I can keep selling options. And I'm already noticing my thinking is starting to change. Before, you probably heard in a few vlogs ago, I can't remember when I mentioned it, but I mentioned before that I kind of wanted to sell the Apple shares and put that into options. So again, I'm noticing that I'm already starting to change my strategy. I got to be wary of that, because I don't want to change what's working for me. So if me buying options right now has been working, I want to keep doing that so I can capitalize on this opportunity that we have here. So I'm not quite sure whether I'm going to buy that option back that I sold, or just let it expire and let the guy buy my shares. I'm thinking I want to stick to my gut. I know Apple's going to be going up quite a bit, which will increase its option values. So I'm still thinking I want to be a buyer of options rather than selling these covered calls for little money right now. It's really not that much money I'm getting by selling these, because I only have 100 shares. I can only sell one option at a time. And so I think I'm going to stick with my gut. I might just let Apple sell the shares, and then I'm going to use that money to buy some more options. And yes, I'll still have most of my money in options, but at the same time, I'm picking far expiration dates. I'm giving myself enough time to go in the money, so it's not like I'm like gambling too much. I'm betting on good companies, and so I think I'm just going to stick with that strategy. And I'm just going to be really careful on how much money I'm making and losing every day. If I see myself dropping a lot, I'll start selling some stuff. I'll lower my risk by getting back into stocks. I just got to be really careful so that I don't lose too much in one day. Hopefully we won't have a bad day. Hopefully Apple, their iPhone's coming out, so hopefully that keeps its price going up. And then when the iPhone comes out is really when I'm gonna start looking into just owning the stock again instead of owning the options, because the hype is everything with Apple, and especially with their phones. When you're hyping the new phone, the stock price is going to go up, just like Tesla did with their Model 3. Hype always builds stock price, especially if it's something really cool that people are really expecting like awesome things for. And so yeah, all right, this vlog's already going to be really long. It's not even 9 o'clock yet, so I'm gonna stop talking and we'll just kind of check in here and there. But I'm gonna I have to edit another video. I have to work on some orders. I have to tutor at 3:30, so I got a lot of work to do. I'm just gonna do that. If anything crazy happens, I'll clue you guys in. But other than that, yeah, we'll just keep checking in on that, in and out, and then we'll come back when the market closes.
And it's doing a good job.
So when they show this on the TV, you always got to pay attention to that, because and read some articles, because there was one time where they said Facebook was reporting earnings, and I read an article like literally the day before that was saying Facebook is poised to blow past estimates. And so I bought stock like the day before they reported earnings, and sure enough, they blew past estimates and their stock went up, and it was like literally some of the easiest money I've ever made. So it also can be a gamble, especially if you're doing options. So I really don't try to do a whole lot with that. I did try it with Umbrella that one time, and then I was wrong about the earnings date. So, but it can be a risky thing. There are some option trading strategies you can do right at earnings, but I'm not skilled enough yet to do that, so I don't really do that. But it is good to pay attention, know when your companies are reporting earnings, because if you are bullish on them and you do think they're going to do really well, hold on, let me turn the volume down. What I was saying was, if you are bullish on the stock and you do think they're going to have a good earnings, and you're feeling, like that's going to happen, then you can buy some options the day before, or stock or whatever, and you might have a really good day the next day. So opportunities are there, so pay attention to when your companies are reporting earnings. And yeah, little quick tip for you guys there. All right, it's 11:17 in the morning. Sorry for the glare, but I just logged into my Amazon affiliates account, and I got my first commission. It's exciting. I've never gotten a commission before from an affiliate link, and I had set up an account a long time ago, and I went 90 days without getting a single commission, so they deactivated my account, and I was coming up on the third month this month. I set it up in March, so March to April, well, actually no, June would have been when they would have deactivated my account. But someone who's been watching my videos, so super huge shout out to whoever ordered that book that I linked to. Super huge thanks. You're keeping my account open now, so thank you so much. Got my first commission, 24 cents. I'm gonna go to the club now. And by the way, whoever did buy this book, this is gonna be one of your favorite books of all time. It's one of my favorite books of all time. It's just an amazing book that really changes the way you think about how you handle your money. And so, yeah, if you haven't heard of this book yet, I'll leave a link in the description below. It's really cheap. I believe it's less than $6. So it's a really cheap book, but it's an older book, but it's been revised and it has such a good message to it. So yeah, thank you again to whoever ordered that. You are awesome. I love you. All right, what's up? Just got back from tutoring. I haven't looked at the market yet. I logged in, but I'm not looking. I did check my phone though, and the stocks look like they came down a little bit. So I'm not expecting to hit 100K today, but let's find out together. Here we go. Oh, oh, so close. Man. I had the funniest thought, like when I was driving home, like I was like imagining myself filming this scene and being at $99,999.99, which would have just been the most epically funny thing ever. Man, it was we kind of got close though. So that is super. Hey, I'm happy. I don't care. We didn't hit 100K yet. We'll hit it next time. So yeah, totally stoked. This is 8 days in a row we are up. Knock on wood. Hope we could beat our record. Our record is 9 that I did last year. So we did 8 years. We did not 8 years. We did 8 days this year, starting at day 64. I think we had an 8-day streak. But if we can beat that, we need 2 more days of. Well, tomorrow would be 9. If we hit tomorrow, we'll hit 9 days in a row. But if we want to break the full record, we need to do 2 more days of gains. So anyways, enough about that. Let's see how we did with the stocks. You can see like we didn't have any huge winners, but it looks like our losers kind of died down, so that's why we did so well. Let's look at the percentages to see who did the best. Woo, AMD, look at that, 87.5%, and we can see why. Oh wow, went up 11% today. That's phenomenal. It was up like 5% this morning, and it was up like 7% last time I checked. That is huge. That was a perfectly executed play that we did, picking up those 7 or 8 extra calls back when AMD was cheaper. So I'm really happy with that move that we did, because I knew it was gonna come back. So it was only a matter of time. So really happy about that one. Who else did well today? Our second best gainer was EA Sports. Awesome. So I'm really glad I jumped on that bandwagon, because that paid off for us today. Gaming, is getting bigger and bigger. So I just took that information that I heard from Jim Cramer and I went with it. Also, Nvidia. I mean, I've always been a bull on Nvidia, so really no surprise there. But yeah, they went up 13%. Zillow, we had some gains with Zillow, so that's pretty sweet. They went up 16%. How did they do in the market today? Oh wow, they were way up there on the first page, so that was a really good day for them. Ambarella, I think we sold. Oh no, we still have Ambarella. Okay, so no movement with them. So let's see, Twitter did well today. Wow, Twitter is almost at $20. I can't believe they came back. That's crazy. But yeah, lots of Etsy did the best, of course. And the reason they did well, because like two firms like released how much stake they had, and like there's 2 of them that had a pretty big investment into Etsy, and that kind of drove their price up today once they announced it. Here's the second page of gains. Sorry for the glare, you can like see my reflection, but these are all also gainers today. We have Tesla. They went up again, not a lot, but the call did go up for us a little bit, 1.6%. Hemp did well, and was there one I missed? No, I think that was pretty much it. Oh, GoPro. So GoPro went up 14% for us today, so that was awesome. And then Apple was our loser, but here's the call that we still have outstanding. In the 19th is 3 days away, so it'll be interesting to see what happens. This will most likely expire in the money, so we're most likely going to lose our shares if I choose to not do anything, which is what I'm leaning towards. I'm leaning towards not buying that back and just using that money to buy more calls. Even though I'm learning how it can be kind of risky, but again, I think my strategy seems to be working okay, picking really far out expirations, giving myself plenty of time to go in the money, and as long as I pick the right companies, that it should be okay. We should still make money. Here's Netflix. They didn't have a good day. Ferrari didn't have a good day today. That sucks. Let's see. Bottoming out, we had these guys. So yeah, so really excited. How much did we actually finish up today? $2,900, and yeah, we are really close. All right, so there you have it. We are on day 8 days in a row of gains. Just crossing our fingers that we can have another day tomorrow, 2 more days. I really want to have a 10-day streak. I'll be happy. I don't even care if I never break that streak ever again. 10 days, I think this would be phenomenal. So if we could do that, we need 2 more days. If we could do that, I'll be super happy. And if we do have another couple days of gains, we're most likely going to hit 100K. So huge milestone, huge milestone. I literally never thought I would get here this quickly. I had no idea going into 2017. My goal was just to get to 58 grand. That was my goal for the entire year, and we're only halfway through May, and we like blew that way out of the water. So yeah, I don't know what else to say, but I'm just super grateful, super excited that the market's doing well. Other than that, I want to thank you guys for watching. Seriously, it's been a blast making this vlog and talking to you guys. It's literally been so much more fun doing this. I feel like I have like friends that I'm talking to that I can like show how well I'm doing, and it's just really nice to do that as opposed to just doing it myself and having really not many people to talk to. So thank you guys for watching. If you do have questions, please comment below. I will respond to every single one. I hope you guys have a fantastic day, and cross your fingers that we make money tomorrow, and we'll see what happens. So you guys take care.